One of the most anticipated IPOs in history finally happened. SpaceX, Elon Musk's rocket company, went public on June 12, 2026. Ticker SPCX, IPO price $135 a share. By the end of that first trading day, up 19%, closing at $160.95. That's not a typo, 19% in one day. And if you're watching this thinking, I missed it, you didn't miss anything. Because what just happened with SpaceX is the opening act. OpenAI, the company behind ChatGPT, filed for their IPO on June 8th. Anthropic, the company behind Claude, the AI everyone's using, filed theirs on June 1st. Both of them expected to go public later this year. We are sitting in the middle of the biggest AI IPO wave in history. And most people have no idea what to do about it. This video is going to change that. Before we get into the specifics, let's make sure we're on the same page about what's actually happening. IPO stands for Initial Public Offering. It's the moment a private company, one whose shares you can't normally buy, opens itself up to the public stock market. When SpaceX was private, the only people who owned a piece of it were Elon Musk, his early investors, and employees who received stock as compensation. The average person? No way in. The IPO changes that. Suddenly, anyone with a brokerage account can buy a share of the company. Now here's the part that matters for you. IPO day is historically one of the most volatile and potentially profitable days a stock will ever have. The opening price is set by investment banks, but the second trading begins, the market decides what it's actually worth. And when sentiment is high, as it was with SpaceX, prices can move fast. SpaceX opened at $150. It hit $176 at its peak. For someone who got in at $135 at the IPO price, or even bought in the first minutes of trading, that's real money, fast. The question is, how do you actually position yourself when the next one hits? Let's break down what happened with SpaceX because it's a masterclass in how these moments play out. SpaceX filed with the SEC weeks before the June 12th listing. The company raised $75 billion in the offering, the largest IPO in stock market history. They listed on the Nasdaq under SPCX at a $1.75 trillion valuation. To put that in perspective, that's bigger than most countries' entire stock markets. The IPO was oversubscribed by 4 times, meaning institutional investors alone wanted 4 times more shares than were available. When that happens, retail investors, regular people like you and me, get even less allocation. This is one of the dirty secrets of major IPOs. The banks that run the offering fill their big clients first. By the time the stock opens for public trading, the early price advantage is often already gone. So what happened? The stock opened 11% above IPO price, ran to 30% above IPO price, and settled at 19% up by close. People who got in at $135 and sold at the peak on day 1 made 30%. People who bought at the open and held to close made 7%. People who bought at the day's high and held overnight lost money. The lesson: knowing the company is coming isn't enough. You need a strategy for how to trade it. On June 8, 2026, 4 days before SpaceX's IPO, OpenAI filed confidentially with the SEC. This is the company behind ChatGPT, the one that started the AI arms race, the one that Microsoft bet $13 billion on, the one that went from $2 billion in revenue in 2023 to over $20 billion by end of 2025. Expected IPO window: September to November 2026. Projected valuation: over $850 billion. Here's the catch: OpenAI is still losing money, $14 billion in projected losses for 2026 alone. They don't expect to be profitable until around 2030. That doesn't mean the stock won't go up. Amazon wasn't profitable for years and became one of the most valuable companies on earth. But it does mean you're betting on future potential, not current earnings. When OpenAI goes public, it will be one of the most watched IPOs in years. The hype will be real, the volatility will be real, and the opportunity and the risk will both be significant. On June 1st, 2026, Anthropic filed a confidential S1 with the SEC. Anthropic makes Claude the AI assistant that's quietly become one of the most used in the world. If you're watching this, there's a good chance you've used it. Expected IPO, October 2026. Projected valuation at listing, close to $1 trillion, $1 trillion. That would make Anthropic the first AI company to debut as a trillion-dollar company. And it's not just hype. Their annualized revenue is currently around $47 billion. This is a company with real revenue, growing fast, backed by Google and Amazon. If OpenAI is the flashy headliner, Anthropic is the company that's been quietly building the thing that actually works. Quick break, and this one is relevant to exactly what we're talking about. All of these IPOs are going to create massive price swings. Stocks moving 10, 20, 30% in a day. And if you don't have a strategy going into that, you're gambling, not trading. I built a course that teaches one of the most historically reliable approaches to trading volatile stocks, mean reversion and range trading. The idea is simple. Prices swing, they always come back. The course shows you how to identify those swings, set your entries, manage your risk, and automate the whole thing. It's $39, one time, no subscription, step by step, with real charts, real examples, and everything you need to go from zero to a working strategy. Link is in the description. Back to it. Alright, so 3 massive IPOs are either just happened or coming. What do you actually do? Let's be real about something first. Trying to buy into an IPO at the offering price as a retail investor is nearly impossible for the biggest listings. The banks allocate to institutions first. By the time you can buy, the stock is already trading publicly. So here are the actual strategies people use. Strategy 1. Buy on the open, sell the same day. High risk, high reward. You're betting that day one momentum carries. With SpaceX, it would have worked. The stock ran from $150 at open to $176 before pulling back. But this requires you to be watching, ready, and disciplined enough to take profit. Strategy 2. Wait for the post-IPO pullback. Almost every major IPO pulls back 20 to 40% from its peak in the first few weeks after listing. The hype cools, early investors take profits, and the price corrects. Buying that dip, if the company is fundamentally strong, has historically been one of the better entry points. SpaceX closed day one at $160.95. If it follows the typical pattern, there will be a point in the coming weeks where it pulls back. That might be your entry. Strategy 3. Wait for the lockup expiration. When a company goes public, insiders, employees, early investors are usually locked up for 90 to 180 days before they can sell their shares. When that lockup expires, there's often a sell-off as those insiders cash out. That creates another dip, another potential entry point. Strategy 4. Don't try to time it at all, just buy and hold. If you believe in the company long term, the entry price matters less than you think. Amazon went public at $18, Netflix at $15. People who bought those and held through all the volatility made generational wealth. If you think Anthropic at $1 trillion valuation still has 10 times left in it over the next decade, the day you buy matters less than the fact that you buy. None of these are financial advice. Trading involves real risk. But these are the frameworks people with real money actually use. Here's what I want you to take away from all of this. We are at an inflection point. The AI companies that have been building quietly for the last 5 years are now entering the public markets. SpaceX, the company that made commercial space travel real, just became the largest IPO in history. OpenAI and Anthropic, the companies whose technology is reshaping every industry, are weeks or months away from doing the same. This is not 1999. This isn't dot-com bubble hype. These are companies with real revenue, real products, and real users. Could they be overvalued? Yes. Markets get irrational. Valuations can disconnect from reality. But here's what history also shows us. The companies that define a technological era, the Amazons, the Googles, the Apples, tend to go up over long enough time horizons, even if they have brutal years in between. The question isn't whether AI is the future, the question is whether you're positioned to participate in it. If you don't have a brokerage account, open one. Fidelity, Schwab, and TD Ameritrade are all solid. Takes about 10 minutes. Research SpaceX, ticker SPCX. It's trading right now. Watch how it behaves in the coming weeks. Get familiar with how a major newly public stock moves. That education is free. Set alerts for OpenAI and Anthropic IPO news. When they announce their pricing and listing dates, you want to know immediately, not read about it 2 days later. And if you want a strategy for actually trading these stocks when the volatility hits, not guessing, but an actual rules-based approach, the link to my mean reversion course is in the description. $39 flat. It teaches you exactly how to identify the patterns these stocks create and how to trade them systematically. SpaceX is public. OpenAI is coming. Anthropic is coming. The AI wave isn't something that's going to happen. It's happening right now, in real time, and the financial markets are finally catching up to what the technology already told us years ago. Whether you trade it actively or just invest and hold, the opportunity is real. Stay informed, stay disciplined, and if you got value from this video, subscribe. We drop a new one every week and we're just getting started. See you in the next one.